Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I want to continue with the methodology in action. I have a new mystery chart this week. I want to do an update on my next 100 trade series and follow up on what we talked about last week, Einstein versus Churchill. Also, given the nature of the market, I want to talk a little bit about market timing. I want to do a brief update once again on the TFM 10% system. And I want to talk about weekly Landry Light. I also want to talk a little bit about using discretion on trades, and that's going to make sense in just 1 second. Housekeeping. I do take requests. If there's something you want me to cover, you can go to davelandry.com/contact. Here's the other contact information for me. My Twitter handle at tfollowingmoron. If you would like to join me on Thursdays, we haven't done them in a while due to various reasons, but I plan on starting back this week. I do a weekly webinar, which is still live. You can bring your questions live, bring your favorite stock picks, and whatever else you want to talk about. Crypto, too. We did a little crypto lately. To davelandry.com/webinar. And that's Thursday nights at 6 Central, 7 Eastern. If you want the slides from this presentation and all the other presentations combined, you go to davelandry.com/StockCharts. I also give you enough stuff to keep you busy for a long, long time, including all three of my books and PDF format. All right, let's talk about the mystery charts and the methodology in action. Now, this mystery chart is going to be a little bit unorthodox because it is a metals and mining stock, and with commodity stocks, I'm a little bit more lenient. You'll notice it does have a gap against the setup, and I'll point that out here in just 1 second. You see a little TKO here, this little gap. Usually I don't take stocks that have a gap against the setup, but with commodities, sometimes you can have a gap and the setup will still work. So we had a little bit of a double top here, and then we had this TKO, this wide range bar lower. Now, I've done complete shows on TKOs, but essentially what you're looking for is a knockout type of move. You're looking for a strong trend first, obviously, and then this one bar knockout move, and that helps to knock out the nervous Nellies, the weak holders, the people who bought at the highs and then all of a sudden are getting knocked out. Also, shorts, not so much with a lower price stock like this, but with a little bit higher price stock, sometimes shorts will get sucked in to the sell-off thinking that the market has topped. The shorts tend to be a little anxious to get short. In fact, sometimes they'll actually short as things are going higher. And the predicament of those players helps to push the market higher should it trigger. Now, keep in mind, with technical analysis, what I'm doing is I'm using the charts to read the psychology of the market. Everything I do has a psychological backing behind it. And a TKO is one of those great patterns where you can really explain it because obviously with a sharp sell-off like this, a lot of people get knocked out of the market. And if the trend continues, then those people have to put up or shut up. And if the shorts jump in and sell, remember, when you short, you have to buy to cover. So in a way, shorting is just pent up buying. Anyway, nice little TKO setup there. And what I often refer to this when you have a little minor double top like this is a double top knockout. Now, if you put your information in again at the davelandry.com/StockCharts link, you will get to all three of my books in PDF format. And I think it was the first book I published that pattern, if memory serves. But if not, you can find it in one of the other ones. Now, here are the parameters down here. Entry 380, protective stop 325, IPT 435. I forget the historical volatility on this one, but it's pretty darn high. So entry 380, stop down here at 325, and then initial profit target is up here. Remember though, no trigger, no trade. Now, last week I talked about Churchill versus Einstein, and trading a lot of times you kind of feel like the definition of insanity, and as Einstein once said, allegedly, the definition of insanity is doing the same thing over and over and expecting a different outcome. Now, with the trend trading, remember we're playing for the outliers, so sometimes you'll have to take loss, and unfortunately quite a few losses before you finally begin to make a lot of money. You'll spend most of your time, or at least a lot of your time, less wealthy as a trend trader, but the occasional big trend makes it all worthwhile. And not that often, not as often as I'd like, but every now and then we'll catch a 300 or 400 or 500% winner, and we end up holding on to it for a couple of years. Now, we do that, as I've mentioned before, through a process which I call free rolling. And Charlie Kirk actually named the money management system that after he saw it. And basically what we're doing is we're taking an initial profit target and then we're trailing a stop on the remainder. And I have two positions that are part of my next 100 trade series that I'm doing just that. In fact, this is one of them. And what happened here is if you look over here to the right, this is a spreadsheet coming in to, I believe it was the 4th. You can see we had a stop at 7. Let's take a look at what happened. You can see it did blow through that stop. Now, I did not notice it, so I'm not really bragging that I did notice it. But sometimes, as I'll explain in a few minutes, I will allow something to go through the stop, especially on a fast move on the open like this. And the opening gap reversal would be another case where I'll go in and apply a little discretion. And I'm going to walk you through that in just 1 second. Now, what happened with this one is I do try to be a little hands-off on the open, but I noticed that this thing was opening nicely higher. So I'm thinking, okay, I don't have to worry about this stock. And I went on to chase some rabbits, do a little intraday trading on some ETFs and some individual issues. The crypto stocks have been heating up lately, so I might have done some crypto stocks too or something else. Now, when I do these things, I have to be careful not to lose sight of my bread and butter. My bread and butter is in this longer term trend trading. But since I'm here all day, and it's something I used to preach against, by the way, I used to preach against day trading, and I think you do need to be kind of hands-off if you're going to do a little day trading. But anyway, I'm kind of digressing here, but the point is I was chasing rabbits, and that's one of the downsides of trying to do too much and trying to trade too many time frames. So I didn't notice that it had gone through the stock, and by the time I checked back on the stock, I noticed it was above the stop. I noticed it was lower from where it opened, but it was already above the stop. So I actually, in this case, made a mistake in my favor. I'm not sure exactly what I would have done during the fast move. Probably because it dropped so much, I would have exited the trade. I know some of my clients were able to hold through that fast move. It's not something that I really recommend, but it's something that I did if only by accident. So here you can see are the trades, and what I did was I just felt like it was a bit of a gift horse, so I went ahead and flipped out half of those shares for an okay profit. Now, I didn't set the world on fire. I'll show you the spreadsheet in 1 second. But I was thinking that if this thing came right back in, from a psychological standpoint, I would be frustrated. And the other thing, too, and I have to be careful of this, but since I started this next 100 trade series, I feel like sometimes I want to put money on the board. So I have to be careful not to get influenced by extraneous events and make sure I'm following my own system. But anyway, the reason I'm showing you all this is for this series, you need to judge me on what I actually do and not what obviously I tell you to do. Anyway, so this was last week's spreadsheet, and you could see based on the trades that I've shown ahead of time as mystery charts and taken myself, since last, I believe, May or June we started this, I was down 4,768 based on those trades. Now, last week I explained, it's like, okay, Dave, you're losing money. How are you making it? Well, I'm making it because I am doing some ancillary trades outside of the core methodology, and more importantly, within the core methodology, which is swing to intermediate term trend trading, I do occasionally catch a big winner. And last year, we rode out ARLP for a long time, and we had a few winners prior to that we did ride out for quite some time. And if you go in and look at the prior shows, you can see a lot of these things. Now, this week we had quite a bit of an improvement. You can see still in the minus column based on these new trades from June forward, okay? But a pretty decent improvement. So you can see we went from minus 4,768 to minus 2,293. So that's a 24.75 improvement over the week. And that's the thing with the trend trading is every now and then when something kicks into gear, it can really kick it into gear. Now, as far as Churchill versus Einstein, well, Churchill wins this week. Now, as I was putting together the show, I started yesterday, and today, right before I went live, I noticed that both of these trades were moving nicely. So there's another $450 gains in the ROIV. You can see it made a really nice move overnight. And then NINE moved a little bit higher, not enough to get too excited about, but another 30 bucks based on the number of shares. And that should probably be a little bit better than that, but I'll follow up on these next week. So getting better all the time once again. So Churchill, at least for now, is winning. And the reason I'm making this point and kind of beating the dead horse a little bit, as I normally do in some of these things, is if I could show you, or hopefully I should say when, I know I just said the word hope, but hopefully when we catch some huge trades, it'll all make sense. And you'll realize that, hey, that comes with the territory being willing to be underwater for a while. Now, a lot of times people say, what exactly should I expect with your trading service? And the honest and quite frank answer is, I don't know, because I can't predict the future. I know that this has worked fairly well in the past, sometimes amazingly well. But if the market gets choppy, there's going to be few trades, and that's why you see the negative numbers that I'm showing you from when I started last summer showing this thing, because the market's been mostly choppy and there's only been a few trades and we hadn't had enough trades to get to those big winning trades. But I'm confident longer term that we will. Now, part of this piece I think is going to morph into more of what can you expect as a trend follower. So as I said a minute ago, expect to spend a lot of your time less wealthy. Expect to be wrong a lot. You would think, hey, you got a 50-50 shot. Well, a lot of times it's really not that good. In fact, if it was 50-50 all the time, as far as big winners are concerned, you would absolutely print money. You might not see my fat arse again. But it can be good at times, and that all depends on the market conditions and, of course, stock selection, which is vitally important. Now, let's talk a little bit about putting the theory into practice and using discretion. Now, let's say your stop is down here and you take a setup, you buy the setup, and then it begins to take off and you're feeling pretty good. Then the next day, it gaps strongly against you. So you're thinking ruh-roh and mother, father, and other things. It's like, why are these coaches walking up and down the sideline saying mother, father? I never could understand that. Anyway, so what you can do in a situation like that is you can implement a damage control plan. Have an uncle point in mind, and if the stock reverses before hitting that uncle point, then you could look to improve upon the situation. You might trail your stop higher intraday, or if the stock makes the mother of all reversals, you might be able to stick with the position. Now, the reason I'm talking about these big gaps against you is sometimes you have that fast move on the open, like the ROIV did, where you have this vacuum all of a sudden, the stock implodes, and then sometimes it'll come right back. Now, with the opening gap reversal, it's a little bit more cut and dry. You come in, you've gotten whacked overnight. So what you do in that case is, if you have discipline, of course, you say, okay, I already have the loss on my books. Okay, so you're already in trouble. You already lost money. That's a real loss overnight. Then you can look to improve upon the situation by giving it a little bit more room, just in case that's the absolute bottom on that gap. You're able to stick with the stock. Now, let's say it's not. Well, you have to be willing to risk a little bit more and get stopped out at your uncle point. That incremental risk from the gap down to your uncle point, longer term, if you catch one or two of these, or I should say, if you're not stopped out of one or two stocks, that turns into a big winner down the road, then it pays for all these incremental losses that are bigger than the gap lower. The distance, again, from the gap down to your uncle point. Now, again, damage control and any other discretion for that matter does take discipline. I'd be more impressed with a newer trader or someone new to my methodology if they followed things a little bit more mechanically. In any case, like ROIV ended up getting stopped out. Now, that one I know is a bit of a gray area because it did go past any reasonable uncle point, but you sort of get the idea. Applying a little discretion, Not throwing caution to the wind, okay? Not saying like, okay, I'm just going to let it go another point, another point, another point, another point. And before you know it, you've got this really big loss that's impossible to manage on your hands. But a little bit of discretion can sometimes help you stick with the trade and improve upon the situation. So anyway, in this particular case, this was a fast move on the open. So again, it's debatable whether or not you should have stayed with this position. In fact, it really looks like it kind of blew through that stop so much that you probably should have exited. And had I been watching more carefully, I probably would have bailed out on the position. Now, you might be wondering why I don't have a hard stop in. And the reason I don't use hard stops is so I can go in and apply a little discretion. There are times, though, where I will put a hard stop in. Let's say if this thing did do a major reversal and I was able to ride it out, I'll go in and put a hard stop in so I'm not watching it all day long. Okay, last week I did a brief update on the 10% TFM 10% system, and I want to follow up on that. And I also want to talk a little bit about the 30 EMA Landry Light on a weekly chart. And it's a pretty cool observation. I know I'm such a nerd. Anyway, the what I call the buy line, which in ACP is called Landry percent of close. I have it set to 90% or 10% below the 50-week closing high. Remember, if you look here, you can see we're on a weekly chart. The system is based on a weekly chart. The idea here was to develop something that didn't trade a whole lot and something that was super, super simple. And that's why I call it the TFM system. By the way, TFM stands for Trend Following Moron, something that a famous trader called me early in my career after singing my praises. And then he got a little PO'd when I kept calling the market higher and he was shorting it. But that's a 2-drink minimum. I'm actually writing the story on that, which is, I think it's pretty damn interesting. But anyway, we have the buy line here, or Landry percent of close, if you prefer that, which is 10% below the 50-week closing high. Now, this system, I didn't want it to be a super active system, something where you'd be chasing your own tail. I wanted this to be something that anyone who cared a little bit about their personal finances could follow it, or at least look at it to see where we are in the cycle. And the system's design, or the designer's intent, I should say, of this system is to get you out of trouble before things get ugly. I often say, kind of half joking, it's always darkest right before it gets more dark. And my thinking is, if a market is going to drop 50%, lose half its value, it's going to first lose 10% of its value first. Now, in some other market other than the S&P, you might have that buy line a little bit further away, but I find that 10% is a really good round number in the S&P 500. And after I developed the system, I actually went back 100 years, and knock on wood, it has gotten you out of every, or would have gotten you out, obviously, gotten you out before every bear market in history. And you might think, well, what about the crash of 87, because that happened so fast? Well, what's interesting there is the market gradually rolled over back in 1987, and people kind of forget about that. Sometimes tops are more of a process than an event. In fact, I learned that from Greg Morris. A top, more often than not, is a process, and a bottom, more often than not, is an event. It kind of turns everything on its head. It's just the opposite of what you would think. And even this last slide we went through here, this is a weekly chart, remember? So it's like 1, 2, 3, 4, 5, 6, 7, 8, 9. You had 9 or 10 weeks before the market began to crack in earnest. So sell signal is simply a close below the buy line and also a close below the 50-week moving average. The 50-week moving average is a whipsaw filter. But anyway, the point I want to make with this is we've been in this bear market for so long, 50 weeks is now here and moving further along. So you could see this buy line is beginning to drop. It was going sideways for a long time, and then now it's beginning to drop. And partly by design and partly by accident, the buy line turned out, or the system I should say, turned out to have a little lag built in, especially when it comes to getting you into a trade. There's not as much lag getting you out because it's a fixed level for the chart to move through. But if the market begins to drop and stays in a bear market for quite some time, it'll take a while to catch up. But once we're in the market, a bear market for a while, then it starts catching up. And you can see the buy line is starting to catch up, as is the 50-week moving average. So we could see a signal here within the next month or so. But if it doesn't create a signal, then there's no need to get excited about the market. Now, just a FYI, a signal is two lows greater than the buy line, and it also has to close above the buy line. We had a false signal back here where it doesn't look like it's above the 50-week moving average, the low that is. You need 2 weeks of Landry Light, but right here it actually is above the 50-week moving average. So technically that was a buy. The intent of the system, the designer's intent, was to buy on strength, not weakness. So even if I'd have seen this signal here, since the market closed poorly, it was down sharply from the week before, I likely would not have taken that signal. And what would the world be without hypothetical questions, said Mr. Wright. But I can almost guarantee that I would not have taken a buy signal on weakness like that. So that's just not the designer's intent. And by the way, when you're learning somebody's methodology, learn as much as you can about the designer's intent. Years ago, I used to help someone pick stocks. I quickly found out that my job was more than just running scans and doing a little programming. He expected me to help him find stocks, actually pick stocks. And I remember one of the first setups I showed him, he said that's not his setup. And I argued with him a little bit, and I said, well, look, here's rule 1, here's rule 2, here's rule 3. It fits everything according to your methodology. And he says, well, I don't like it. And that just kind of woke me up a little bit, that everything isn't cut and dry and mechanical. And just like the system had a buy signal on weakness, I never intended for that system to work that way. Now, you don't have to read my mind. You just have to know that as a trend follower, I always buy on strength and I never buy on weakness. Now, getting back to the S&P 500, I thought it'd be kind of cool, I don't know, you're going to party with me, to take a look at the weekly 30 EMA. I really love the daily 30 EMA. Years ago, I did a lot of work with the 20 EMA. I know about this point, you think, man, I want to party with this guy, you and your EMAs. And that's where I came up with the 220 EMA breakout system, which I've talked about before in these presentations and especially in my Week of Charts presentations. But anyway, since then, I found myself liking the 30 EMA more and more. And just recently, I started messing around a little bit with the 30-week EMA. And I find it to be a pretty cool indicator when you're using the Landry Light. And you could see coming into this slide that we had this year, we had Landry Light for a long, long time. You can see it's green down here. These bars just simply count the number of days the stock or whatever market you're looking at, in this case an index, or above the moving average. You can set it for whatever moving average you want, and then it helps to plot the moving average above so you can see what's actually going on. Now, what I find pretty fascinating is we were green all the way up until early 2022, and we had one bar of Landry Light. And then we did have one bar to the upside, and then later in the year we had one more bar to the upside. But for almost the entire year, after the market first intersected the moving average, we've had downside Landry Light in only 2 bars the entire year. That's 2 weeks where the lows were greater than the moving average. Now, again, remember, this counts the number of days or number of weeks or periods, however you want to look at it. It does not measure the magnitude. So you can see right here, we had 60-something days where the lows were greater than the moving average. Back here, you had 0 because it intersects, and then it begins to grow. The great thing about this is it gives you a visual of how mature that trend is, and not that you want to predict when the trend is going to end, but when this thing goes 100 bars or so, usually you get some sort of correction. Now, if we zoom in on the year, you could see you had one little green bar here. The Landry Light upside count was 1, okay? But what's interesting is if you look at the high of that bar, and you can see it tailed way, 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 way off, so it didn't close on strength. But you can see that high was never taken out, so there was no follow-through. So no matter how great your indicator is down here, even if it's something by Big Dave Landry, make sure you're looking at the chart and make sure you're seeing some follow-through on your charts. So again, here would be your other period of Landry Light, in this case, 1 week Landry Light with a 30 EMA. And that was the only 2 bars above, lows above the EMA the entire year. And once again, in this particular case, again, there was no follow-through. So always look at the chart. Use the indicator to help you, but always look at the chart. And it's just pretty amazing. And I know I'm a nerd, but it's amazing how something as simple as the TFM 10% system, of course, and Landry Light, especially if you're looking at a weekly chart, how that can help to keep you on the right side of the market. Well, that's all my time for this week. I want to thank everybody for watching. Again, if you need follow-up information, davelandry.com/StockCharts. If you need to reach me, davelandry.com/contact. So thanks again for watching, and may the trend be with you.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.